Hey everyone, welcome back to the channel. Today we are talking about something every buyer is asking right now. How much will launch prices go up in 2025 and 2026? With land bids rising and buyer interest shifting, we are going to break it all down using a clear PSF prediction model. Whether you are planning to buy soon or just watching the market, this video will help you stay one step ahead. So let's get on with it. So let's start with the basics. PSF means price per square foot and is a tool to compare how a property is priced compared with the surrounding neighbor properties. The key to compare PSF is an apple-to-apple comparison. Due to post-harmonization, where aircon ledgers takes about 6% of the total size, which are no longer included, it seems like PSF has shot up. But this is not true. Now let's say a property that costs 1.9 million at 720 square feet in size, which is 260-38 PSF. You are comparing that with a nearby resale of 1.8 million at 764 square feet in size at 2356 per square foot. But in reality, after you convert the new property to pre-harmonization size, the total size of the two properties are the same. In fact, after calculating a PSF, the new property is only at 2486. Since the difference is very small, the new launch property seems to be more in value. So always ask when you are comparing PSF. Are you comparing post versus post harmonization or pre versus post harmonization, and make sure you do the right conversion? But behind these numbers are key factors like land cost, construction cost, launch strategy, and even market timing. Since 2019, we have seen steady PSF growth, especially in the OCR and the RCR zones, and the momentum haven't stopped. Developers are paying more for land in GLS tenders, especially in areas like Lentor, Tengah, and One North. That means future launch prices are already baked in, even before show flats open. In fact, URA has a reserve price for a plot of land. The government will reject the land bid price if the bid is under your reserve price, which is kept unknown to the public. Two recent examples are notably for the Marina Garden Crescent site in February 24 and a master developer site in the Jurong Lake District in September 24, indicating a mismatch in price expectations with developers. These rejected bids were for prime land parcels, suggesting developers are becoming cautious about the property market outlook. Construction cost has also almost increased by 50% since 2016, from an index of 98 in 2016 to 138 this year. This data can be obtained from BCA website, linked in my website article. Lastly, buyers' demand has been very strong. In fact, judging from the recent launch of River Green and Promenade Peak of average 3,500 and 3,100 per square foot respectively, the first day of sales has been 88% for River Green and 55% for Promenade Peak. Increase in cost and demand has led to price increase. However, if you look at developers' profit margin, they have decreased substantially from 30% in the past to less than 10%. This small profit margin is mainly due to high land and construction costs and also in competition in the developer property market. Now, here's how we build our PSF prediction model. We take into account GLS land bids, apply average construction cost and legal costs, then stack on the expected profit margin, usually 15 to 18%. Add in surrounding resale benchmarks and you get a price range. For example, a GLS land sold at 1,300 per square foot per plot ratio typically results in a launch price of 2,100 to 2,300. With this model, we are projecting that OCR condos will hit an average of 2,200 to 2,400 per square foot by late 2025, RCR may be around 2,600, and CCR should be 3,300 per square foot. Some buyers are still hoping for the price to dip. But let's be real, developers aren't likely to cut prices when their cost base is fixed. In fact, many are launching in phases to keep supply tight and prices firm. Plus, buyer psychology has shifted. Many Singaporeans now prefer new launches for higher safety net, the 1-year reliability defect period, and the capital upside. In other words, they are not just buying a property. They are buying time and peace of mind. I wrote a whole article on this, so watch my previous video on why new launches beat resale condo to find out more. And the website link is also in the description below. Last but not least, what should you do right now? Whether you are thinking of buying a property now or maybe in the future, this is what you should be tracking. So what should you do? If you are planning to upgrade to a second property in the next 6 months to 3 years, start tracking land sales now. Look at upcoming sites in the GLS pipeline. Match this with the information from the URA website itself. Now I'm going to put in the description below also. Next, calculate your expected PSF for the new launch based on the land price itself. Lastly, with this expected PSF for the new property price, compare with the surrounding plots of resale which is, and to compare to see which is more. You don't need to rush, but you do need a plan. Because when new launches open, especially the good ones, they'll sell out fast. Now, if you find this video helpful, give it a like and subscribe for more insider insights. And if you want a personalized PSF forecast based on your budget and target area, check out the link below to book a strategic call with us. Until next time, I'm James Lim, helping you buy smarter, upgrade confidently, and build real wealth through Singapore property. Thank you so long and see you next week.